Compliance is obligatory, and it is by far the largest cost for the MTO. Your cost can really skyrocket because you've got 5-6 supply chain partners to deal with. That is by far the biggest cost element for the MTO.
Hi everyone, and welcome to the IPR Podcast. I'm Natalie Perkins, Marketing Manager at RemitONE, and today we're talking about a key question every money transfer operator is thinking about, and that is how can MTOs reduce costs while still scaling their business? As we all know, as operators grow, costs can build very quickly across many areas. So in this episode, we're going to be looking at the 5 key ways MTOs can reduce costs and scale smarter. I'm joined today by Aamer Abedi, CMO at RemitONE. And Aamer, it's great to have you with us. So why does compliance become harder and more expensive as transaction volumes grow?
Compliance is obligatory. It's not optional for the MTO. So if you operate in one corridor, there's a lot of costs, compliance costs associated with that corridor. If you operate in multiple corridors, obviously the compliance costs will proportionally grow. Mm-hmm. So you can't get around that. Yeah. And that is by far the biggest cost element for the MTO.
And how can these MTOs reduce that cost or the manual workload that comes with compliance?
There are many sophisticated tools available. Technology is the solution. With technology, you've got many sophisticated tools, AI tools, etc., which automate your compliance processes to help mitigate your risk associated with your transaction volumes.
Yeah, and things like failed transactions. Like how does the AI help with stopping all of the failed transactions that might actually be okay and should have gone through?
Yeah, I mean, the agentic AI application is very sophisticated now, right? It can do the work of a human being, right? And it can flag up these transactions, preempt, fraudulent transactions from getting processed. These rules have to be inputted into a technological suite, if you will, and then let the technology suite handle it for you.
Yeah,
that's.
Yeah, and as this is one of the biggest cost areas for MTOs, it makes sense that this could be, one of the first places that MTOs look to maybe make these cost savings.
That's correct, yeah.
Okay, and then moving on, so you mentioned agent management as well. So how can better agent oversight help MTOs reduce cost and also reduce risk as well?
So one thing we need to understand is that the regulator or the central bank will audit the MTO, not the agent. So the onus of making sure that all compliance processes and procedures are followed is on the MTO and not on the agent. So if you're going to, if I as an MTO am going to rely on my agents to send me transactions, then I have to have complete oversight on those transactions, because at the end of the day, the onus is on me to answer to the regulator. So if I give the agents my own system and my terms and conditions and ask them to adapt their processes to my requirements, because I am the licensed entity, which I am in this example, then it's much better for me, peace of mind for myself, right? Because all the processes are as per my requirements. And it's my software that the agent is using to send me transactions. So I have complete oversight.
Yeah, so it's about the MTO kind of having more control, more oversight.
That's correct.
And it reduces the technology costs and just simplifies the process.
Absolutely, it simplifies the process. It's my technology that I'm sharing with the agent. It's a cost saving for me and for my agent. If the agent is using its own technology, their own technology, for example, I don't know the nature of that technology. I don't know how reliable that technology is. I don't know how reliable the internet connection will be, for example. But if I have the right technology that I can share, it'll speed up the transaction processing times, i.e. quicker revenues, make it easier for the agent, make it easier for myself.
Yeah, and with the faster transaction times, it's better for the customers.
For the absolutely, well, absolutely.
Yeah. Okay. And then the third area you mentioned was the partner ecosystem. So how can MTOs make savings through the partners that they connect with?
So if what usually happens is the MTOs will reach out. So you have something called supply chain members, right? So you have your ID verification providers that the MTO has to deal with, has to work with. You have payment gateways that the MTO has to work with. You have SMS gateways. You have PEPs and sanctions list providers. There's so many supply chain members, what we call, as we call them in the industry. If the MTO were to reach out to these supply chain members individually, they will each quote the MTO a certain figure. And these figures in totality could work out to a lot, actually, per transaction. Your cost can really skyrocket because you've got 5-6 supply chain partners to deal with. If you go with a technology solution provider that already has these relationships established with these various supply chain members, then you get discounted rates through your technology partner because they've got the relationships in place with those 6-7 partners, supply chain partners that you need to work with. So you get discounted rates, you get wholesale rates.
Wholesale rate
as opposed to retail rates.
Yeah okay. True. And so that's the operational partners. And then how about like the payout partners? And when we're thinking about like FX and those kind of rates, how can an MTO make savings through their payout partners?
Yes, yeah. So this is obviously a big cost factor, right? Yeah. So the payout partner, depending on the MTO's relationship with the payout partner and the region or regions the payout partner covers, you will get a certain rate that you'll have to pay. This could be a percentage of the money that you make from the customer that you have to pass on to the payout partner, a commission, plus the FX markup that the payout partner charges you. And these are not always the best rates for you as an MTO. If you are an MTO operating in a single corridor, one corridor, then okay. But if you're expanding, then that one payout partner will not be able to pay out for you in other countries, in more than one country. So then you have to go to multiple payout partners, and that could really add to your costs. So using a consolidated technology platform, which already has established relationships with various payout partners, can give you really good rates. And because of the aggregation, the sheer volume of transactions, you can aggregate, and basically the technology solution provider can give you really good rates because they're getting a lot of transactions coming in, which they're dispersing through various payout partners. But the rates that the technology solution provider gets from its partners can be very competitive.
Much better than what they would be able to get themselves.
That's correct.
So it's all about aggregating volume, but also benefiting off the technology provider's
relationship.
Total aggregated volume.
That's correct.
Yeah.
And the relationships that the technology provider has with the different payout partners.
Yeah, okay.
Because they'll get, again, wholesale rates as opposed to retail rates.
Yeah. And then another channel that you mentioned was like digitisation. So that's the fourth area, is digitisation. How can digital wallets, mobile money help MTOs scale more efficiently?
The reach, number one, is the reach that the MTOs have now. Once they tap into the mobile wallet network of these telcos, for example, in the payouts country, they have instant access to a large segment of the population, which is the majority of the population, who are typically unbanked or underbanked. So with access to the mobile wallet, you basically have access to that. I mean, take, for example, India as an example. 1.2 billion people and just 200 million bank accounts. But the remaining, the large chunk of the remaining population, they just have mobile wallets.
Yeah, so it's about reach.
It's about reach.
Expanding your reach.
And
making it more convenient for the customer.
Yeah.
Yeah.
Yeah, and remember, the customer, the beneficiary who's receiving the funds, in this case, they're receiving the funds on their mobile wallet. they're saving costs as well because they don't have to burn fuel to get to a branch, wait in the queue, and all that. That's all gone now.
Yeah. Right. So the MTO saves on
so customer experience,
having the physical agents, and the customer benefits from just the experience of
the customer experience and loyalty. Yeah. The second cost component to the MTO, in the case of digitization, is the integration with various telcos in the payout countries, and that's a significant cost integration. It's probably the second or third largest cost component for an MTO, the integrations with payout partners.
Okay.
So when you have a technology platform that's already integrated with these telcos, that really cuts down your costs.
Yes.
So that's something to keep in mind.
Yeah, absolutely. Okay. So there's a huge cost saving in terms of like the integrations.
Yeah.
And then the final part we mentioned is market expansion. So when MTOs are thinking about entering a new market, what's one of the ways they can do this more cost efficiently?
So based on the data that we've got so far, observing the trends and the inquiries we get from customers from all over the world, we can tell you that for market expansion, the most trending solution is what we call in our industry RaaS, Remittance-as-a-Service. So this is a very powerful way to tap into new send markets and multiply your business in a very short span of time.
Yeah.
So you no longer have to go through the licensing and bank accounting problems that MTOs face in send markets.
Okay.
Through this RaaS solution. Essentially, it's bringing into the equation a licensed entity that provides the MTOs in these send markets with the license cover, bank account provisioning, etc. That really, really simplifies and reduces the time it'll take for them to go live. From that send market.
We look at an example like for, let's say, the US. The cost of getting a license across all the states in the US. So what you're saying essentially is this RaaS solution, you can get that license coverage.
That's correct.
They don't have to apply for their own licenses. No. And how quickly could they go live, for example? Okay, months,
Instead of years.
Yeah, so it's a huge time saver and a cost saver. Yeah.
That's correct.
And typically, like what kind of markets do you see MTOs looking to expand into?
The most in-demand markets are US, UK, EU, and then UAE.
Yeah, okay.
Because these are very large send markets. Oh, actually, Canada is there as well. So
yeah, and Canada. So
a lot of action in Canada, of course. So Canada would be the fifth send market for RaaS solutions.
And are we looking? So are these kind of MTOs coming to you that are already in send markets, or are these MTOs that are in receive markets that want to get, take advantage of both sides of the corridors?
Yeah, I would say about 80%, 85% of the MTOs that come to us are in the payout markets.
Okay.
And they want to have a foothold on the send market. 20%, they would be operating in a few send markets, but they want to suddenly have a foothold in a new send market that they want to capture. Yeah. So some of the companies, MTOs that approach us, are already well established in the UK to Africa corridor, for example. And they're an established brand, but they're not in the US. So through RaaS, US RaaS, they can immediately launch a new corridor from US to the same payout country where this MTO has a very strong foothold in.
Yeah, I can see how, exciting that would be to an MTO when looking to expand into new regions. Okay, well, thanks, Aamer, for coming on the podcast today. So I think the key takeaway is that reducing costs is not just about cutting back. It's about building a smarter and more scalable operation. And for MTOs, that means looking at where costs are building up across compliance, agents, partners, and payout channels, and market expansion, and asking where technology can reduce manual work, improve visibility, and create better control. So thanks everyone for listening to the IPR podcast. If you found this episode useful, make sure you follow us for more conversations on innovation in payments and remittances.